Prime Minister Rishi Sunak said on Sunday. The British government was working to find a solution to limit the potential hit to companies resulting from the failure of U.S. lender Silicon Valley Bank and its UK subsidiary. Sunak said he understood the anxiety and the concerns customers of the bank have. In comments made to reporters flying with him to the United States, he and the government were making sure we can work to find a solution that secures people's operational liquidity and cash flow needs, he said. Friday's dramatic failure of the SVB Financial Group, which focuses on tech startups, was the biggest bank collapse in the U.S. since the 2008 financial crisis. Potential bidders for SVB's UK subsidiary have been contacted. The collapse could have a significant impact on British technology companies, given the importance of the lender to some customers, Finance Minister Jeremy Hunt said earlier on Sunday. We've been working at pace over the weekend, through the night, Hunt told Sky News. We will bring forward very soon plans to make sure people are able to meet their cash flow requirements to pay their staff. Hunt said efforts are focused on finding a longer-term solution that minimizes or even avoids completely losses to some of our most promising companies. The Financial Times reported that the British government was trying to get a buyer for the takeover of Silicon Valley Bank UK Ltd, and a Middle Eastern buyer has expressed interest. The lead White Knight was a United Arab Emirates-based company as of last night, the FT said. Advisory firm Rothschild & Co. is exploring options for the subsidiary. As insolvency looms, two people familiar with the discussions told Financial on Saturday. The BO has said that it is seeking a court order to place the UK arm into an insolvency procedure. Lenders including Barclays plc and Lloyds Banking Group are among parties that have been approached by the board of SVB UK over the weekend to see if an emergency takeover deal can be reached, Sky News reported on Sunday. NatWest Group has also been approached. A person familiar with the matter told Financial Literacy. Bank of London, a clearing bank, is weighing whether an offer is possible. A person with knowledge of the discussions told Financial. SVB Group declined a financial request for comment while Barclays and Lloyds Banking did not immediately respond. More than 250 UK tech firm executives signed a letter addressed to Hunt on Saturday calling for government intervention and warned of an existential threat to the UK tech sector. A copy seen by Financial Literacy shows. Under insolvency proceedings for banks in Britain, some depositors are eligible for up to £85,000 of compensation for cash held at lenders, or £170,000 for joint accounts. Customers may not be able to recover deposits in excess of those sums, which are small relative to the deposits some startups had with the bank. Hunt reiterated comments by the BO that overall, Silicon Valley Bank had a limited presence in Britain and did not perform functions critical to the financial system. The pledge to find emergency support was welcomed by tech firms and lobby groups, including the startup industry body Kodak, calling it an acknowledgement of the scale of the challenge. The opposition Labour Shadow Chancellor Rachel Reeves urged Hunt to offer more than warm words to companies, saying the government had to come up with a plan by the time financial markets opened on Monday morning. Sunak has said he wants to turn Britain into the next Silicon Valley. Britain is behind only the United States and China in terms of the level of venture capital funding for the sector, according to the government. In the U.S., the Federal Deposit Insurance Corporation, which was appointed receiver, was trying to find another bank over the weekend that was willing to merge with Silicon Valley Bank. People familiar with the matter said on Friday to minimize the fallout. Some financial industry executives and investors are growing increasingly concerned that the collapse of the bank could have a domino effect on other U.S. regional banks. if regulators did not find a buyer over the weekend to protect uninsured deposits. Contagion spreads. Desperate customers line up outside First Republic Bank to take their money out. Dozens of customers lined up outside of a First Republic Bank in Southern California on Saturday, eager to withdraw their funds in the wake of the collapse of Silicon Valley Bank. There had been fears following SVB's demise for First Republic's future, when analysts pointed out the similarities between the estimated value of their assets versus the actual value. The news of Silicon Valley Bank's collapse sent shockwaves through the wine industry. It had been the main financial institution for wineries in California for almost 3 decades. The California Department of Financial Protection and Innovation closed the bank on Friday after depositors, concerned about the lender's financial health, rushed to withdraw their deposits. The frenetic 2-day run on the bank blindsided observers and stunned markets, wiping out more than $100 billion in market value for U.S. banks. By Friday night, thousands of wineries in Northern California found that they were completely locked out of their accounts with no clear timeline as to when they might be able to access their funds. First Republic issued a statement on March 10 seeking to calm investors, pointing to its continued safety and stability and strong capital and liquidity positions. California Gov. Gavin Newsom said Saturday that he's talking with the White House to help stabilize the situation as quickly as possible, to protect jobs, people's livelihoods, and the entire innovation ecosystem that has served as a tentpole for our economy. U.S. customers with less than $250,000 in the bank can count on insurance provided by the Federal Deposit Insurance Corp. Regulators are trying to find a buyer for the bank, in hopes customers with more than that can be made whole. Silicon Valley Bank's wine division founder, Rob McMillan, who would write the yearly Insights, has so far declined to comment on the situation. But he had developed the bank's reputation into one of the few institutions that truly understood the wine industry. The data amassed by the bank was a source of data that wineries would use to make decisions on future sales, marketing, and farming. The bank had a unique perspective on the industry because of the number of clients it helped finance. The loss of the annual report in particular means wineries will not have access to the comprehensive analysis that many use to help make their decisions. A new bank was created on Friday by the Federal Deposit Insurance Corp., the National Bank of Santa Clara, which will hold the remaining deposits and assets of Silicon Valley Bank. But only accounts containing $250,000 of less are insured by the FDIC. Employees of Silicon Valley Bank were offered 45 days of employment at 1.5 times their salary by the Federal Deposit Insurance Corp., the U.S. regulator that took control of the collapsed lender, according to an email to staff seen by Reuters. Workers will be enrolled and given information about benefits over the weekend by the FDIC, and healthcare details will be provided by the former parent company SVB Financial Group. The FDIC wrote in an email entitled Employee Retention late on Friday. SVB had a workforce of 8,528 at the end of last year. Staff were told to continue working remotely, except for essential workers and branch employees.